Assalamualaikum warahmatullahi wabarakatuh. Hi, we are from Group 2. We choose Padini Holding Berhad as a company for our assignment. Background of company. Padini was founded in 1971, started as a small ladies' garment and wool-selling business supplying to departmental stores in Malaysia. Decided that the futures of the fashion industry required to build their own brand. Now, Padini Holdings Berhad is a Malaysia-based investment holding company that operates through 5 segments, which is Vinci, Padini Corporation, Seed, Yi Fong Hung, and Mickey House. Padini export their product to the United Arab Emirates, Oman, Syria, Qatar, Bahrain, Pakistan, Egypt, Morocco, Kuwait, and Thailand. In total, Padini have over 140 stores in Malaysia and multiple markets around the world such as Cambodia, Indonesia, Bahrain, Brunei, Myanmar, Oman, Qatar, Thailand, and UAE. Type of property, plant, and equipment of Padini consists of freehold land, building on leasehold, building on freehold land, furniture and fixtures, motor vehicle, and office equipment and tools.
Now let's go to the ratio analysis. The ratio analysis that we use in this PPE is the asset turnover. Now, this is the computation of fixed asset turnover ratio that we compare with 3 years starting from 2020, 2021, and 2022. So the formula that we use is the net SL divided by average total PPE. How we get average total PPE? We got from ending balance current year plus last year ending balance of PPE divided by 2. So as we can see that from 2020, the ratio analysis that we get is 11.53 for 2021, 11.28, and for 2022, 16.96. So how to analysis each ratio for these years? The increase of fixed asset turnover ratio from 11.53 to 16.96 suggests that the company is efficiently utilizing its PPE to generate sales. So this means every ringgit of PPE generates RM 16.96 of net sales for 2022. Alright, now let's move to the impact and value of PPE for the company. So what is the main PPE in Padini Berhad? As stated by Zul, the main or the higher amount of PPE in Padini Berhad is building on freehold land with the amount of 331,268,000 amount for 2022. With that significant amount, it can show that the building has a really significant impact for the Padini Berhad, such as a business operation where the place to keep the stock or to make the sale, and also for the administration purposes. As the name stated, building on the freehold lands can be distributed by many departments such as factory or warehouse that can provide the necessary infrastructure and resources for production, storage for stock, and give a smooth distribution of goods and services. And also for the operation. Now, why this PPE has a good impact for Padini Berhad? As we know, these property are typically long-term investment for the company. So they represent a significant portion for the company total asset. So it can attract more investor or any stakeholders to invest to Padini Berhad, as the asset or building on freehold land has the higher amount among the other PPE. So it can show the substantial impact on the financial health and the value of the business. So that is why it has a good impact on Padini Berhad.
Okay, next, we will move about the MFRS 116, the accounting treatment in this company, property, plant and equipment. So, we will not cover the impairment of asset because there is no impairment of asset in company. There is only MFRS 116, property, plant and equipment. So, we will cover about initial recognition, initial measurement and subsequent measurement. For the first one, how can recognize as an asset? It should be qualified 3 items, which is asset can be controlled by the entity, arise as a result from the past event, and the entity have the rights to the economic benefits. Okay, provide the entity with the rights to the economic benefits. So example, we have motor vehicle. Motor vehicle that generates item to the income to the company as transportation in operation and production, such as transportation of stocks. So the motor vehicle can meet the definition of the arises as a result from the past event. The company has incurred the cost in the past event to obtain the assets. And also, Padini can control this asset as requirement such as they can organize and operate motor vehicle. So as a result, the motor vehicle meets the recognition criteria of the company to be an asset. So next, how can the asset can be PPE? They have 2 criteria. First of all, can be measured reliably and provide an economic benefit to the company. As example, the company, the cost of PPE shall be reliably can be measured as stated in notes. The cost of the Padini property, plant and equipment indicates the balance for the year and previous year, such as building provide an economic benefit to the company for operation and asset staff. So initial measurements. First, Padini property and plant equipment are measured at historical cost, includes all costs directly attributable to acquiring or constructing the asset. And third, important to recognize the actual cost incurred when it is first acquired. Number 4 and the last one, involve determining the cost or fair value of the asset and recording it on the balance sheet. For the subsequent measurement, after the initial measurements, what we need to do? Measure its PPE using a cost model. No impairment and reversion applied to all PPE in Padini. PPE is differentiated based on straight line basis over the estimated useful life. PPE reduced by depreciations, disposal, and write-off asset. Useful life of an asset state in the note 5 of the accounts. Amount of depreciations and write-off asset disclosed and reported in the income statement under expenses. Any gains on disposal reported in income statements under income columns. The carrying amount of the PPE need to be reported separately in the statement of financial position or within the PPE notes. So for the example of accounting treatment, we have the acquisition of PPE. We can debit the asset and credit by the cash or bank. So for the disposal of PPE, we can debit the accumulated depreciation, debit the loss on disposal, debit the gains on disposal, and credit the PPE accounts.
Okay, the disclosure in the note of account. So we choose the Padini company. So we look at the Padini disclosure in the notes of account. So we follow the MFRS 116, which the financial statement should be disclosed for each type properties, plant and equipment. So we have 4 here. The measurement base used in determining gross carrying amount, the decision method, useful life, and the gross carrying amount. Okay, first, the measured base used for determining the gross carrying amount. Okay, the Padini state the PPA are initially at the cost and after the additional recognition. So the PPA are state at the cost less any accumulated depreciation and any impairment if have. Okay, second, depreciation method used for Padini Berhad, Sidang Berhad. The method used for PPE also state is depreciation used based on straight line basis over estimate useful life. Okay, third, the useful life or depreciation rate used. Okay, we can see useful life or depreciation rate used has reported for freehold land has unlimited useful life and not depreciate because the land, so we know the land have no depreciation, so we use the useful life and it unlimited useful life. Okay, the last, the gross carrying amount and accumulated depreciation, the beginning and the end period. The computation for the gross carrying amount and accumulated depreciation for the beginning and the end the period was calculated for faithful present for the group company. Computation of carrying amount and accumulated were shown respectively in the separate way in each PPE in the notes. Okay, what the use of disclosure? So disclosure for actually for the investor to look at the disclosure of the company. So disclosure are not provided useful to the entitled potential investor without any error occurring in the accounting treatment, such as accounting treatment of cost PPE, requisition, disposal, and also return right of asset. Okay, so that's all from us. Thank you for watching.